Ibasera, as we say in Russian, to discuss all that. We're joined by Alpesh Patel from Profini & Partners. Alpesh, thank you very much indeed.
Right.
Well, actually, let's start with this story, which we've been covering too, those devastating floods in Brisbane. And, of course, you know, we have to remember that is a very resource-rich part of the world, isn't it? And Australia's economy will suffer because of this.
Yes, I mean, obviously, first and foremost, the big tragedy is the loss of life, particularly when it comes in a first-world country from natural disasters, because when you have the floods in Pakistan, you can understand there'd be widespread loss of life. But in a first-world country, it shouldn't really happen. And if you were looking at a positive side to any of this, better that you had natural disasters in a first-world country than you do it in the third world. And the Australians are capable of I won't say containing this because it's a force of nature,
but certainly dealing with it.
But dealing with it. But you're absolutely right. I mean, Reuters have picked up on this issue about Rio Tinto, their Anglo-American, Xstrata, BHP Billiton. So you're going to get commodity prices
I think it's 5%
rising.
of the coal for steel making in the world, I think.
As well. So you're going to get, and we're going to talk about commodity prices. They're rising generally around the world. This isn't going to help. But more broadly, when you look at all these stories, there is an end-of-the-world feeling to all of this. It is, I mean, I know when we talk about floods, it's cliche to say biblical. But it is like something out of Revelation.
Well, certainly when you look at the amount of land that's covered.
And what's happened in the last 12 months around the world as well, between things like Haiti and yes, exactly, all natural disaster around. It's time to get religion if you haven't got it already.
Let's look at, let's get your thoughts, I should say, really, on the European debt crisis and this latest phase, because we've actually had quite mixed reports in the newspapers today. You look at the Spanish newspaper, and of course they're really applauding what happened in Portugal, perhaps not surprisingly, but if you look at the Wall Street Journal, it says Portugal's failing to quell fears with its auction. What's your view?
Yeah. In case either you or your viewers don't know, the financial markets are basically a con trick. They're a confidence trick. And the Portuguese government have worked this out, and they've pulled off the con trick. And the con trick that they've pulled off is that they've managed to get a bit of confidence in the markets because they've said, look, we've got access to funds. But Bloomberg have called it right. So it's neither Wall Street Journal or the other papers. Bloomberg have called it right. They've said it's bought them breathing space, and that's all it's bought them. It's a little bit annoying because the easiest and best trade at the start of the year was sell euros. Sell euros, buy dollars, or sell euros and buy Australian dollars because their currency was rising as well. Sadly, we're not going to be able to make lots of money out of the Portuguese misery because they have bought themselves some breathing space, but let's wait and see if we can...
It is only breathing space, isn't it? Because the jury is still out about whether or not they're going to achieve their deficit reduction
and you're going to have
targets.
to handle,
and also,
again,
you know, it is the old liquidity trap. The more you try to put up taxes and cut debt, the more actually you slow down your economy, potentially when you're in that sort of state, and actually you don't cut debt.
And that's why you are going to have to follow this week by week, as opposed to saying we're out of the woods. They're certainly not, and they too may well have their end of the world coming sooner or later. We're certainly not out of the woods on this.
Well, let's stay with issues concerning the euro, because we are obviously now discussing that, and that story in the Times saying Britain must help us save the euro, warns the French Prime Minister. But the interesting thing is what Francois Fillon is saying is in order to consolidate the euro, we'll need gradually to harmonise our economic, fiscal and social policies. Hence, we're going to go towards greater integration. So his answer is more Europe, not less Europe, is the answer to
yes, if I was being a statesman, I'd say yes, of course, all our currencies are interlinked, and these are our neighbours, and blah-de-blah-blah, and all the rest of it, and we should help bail them out. Look, it's tough economic conditions. You guys had a party which we didn't want to attend, and you want to stick us with the bill, is the way it's looking. Now, the Times have been very restrained, a Murdoch-owned paper, which is reliant somewhat on the government in terms of its bid for B-Sky-B. So they've been very restrained. But the problem the Prime Minister's going to have is he does want to be statesmanlike. He would want to help the euro because he will follow that argument that we're all interconnected and we need to make sure the euro doesn't plunge and all the rest of it. The problem he's going to have is not necessarily the Times, who, as I say, have been restrained. But when you look at the other British papers, they haven't been so restrained. And what they're saying is, no, wait a minute, this is a crisis. We stayed out of the euro. In any event, when the EEC was formed, the French kept on vetoing British interests. In other words, they're being very jingoistic and so on. And that's going to be the problem for the Prime Minister, how to be statesmanlike when the media isn't willing to follow you when you're taking that lead.
You have to be pragmatic, don't you? In the end, if you're Britain, you say, well, actually, the euro is a reality. We may not have wanted to join. We may not really like the idea. We may not think it works very well, but its collapse would be a disaster for the British economy because it would cause chaos in our major trading partners.
And he's going to have to tell the French, sorry, we haven't got the money, the public won't wear it, go to the Germans and go to your new best friends, the Americans, as well. Not statesman-like language. He won't put it in those terms, I'm sure.
Interesting, he says the one thing I'd like to import is your pubs. That's what he says. So at least there's
Oh, he's going to
some
be
good
very
reason.
friendly. He's come for money.
I wouldn't mind importing a few French restaurants, actually, so we can do a swap.
Our
Let's see.
currency, not our pub.
Exactly. Let's go back to the whole question of inflation. Well, we've got this now in the Financial Times. US crop stock forecast deepen fears of food crisis.
I told you, end of the world. I mean, you know,
yeah.
if you haven't read your Bible recently, read it because it's all in there. That's market forecast. And it's going to get worse this year. And it's not just with food, it's commodities more generally. But it is going to get worse because there's supply constraints due to natural disasters. But also, you know, I'm out in India every 6 weeks. They're dying to get a beast. And in other words, they've got more money, they want to eat more, put it in simple terms, and the same with the Chinese. So the demand is skyrocketing. And, you know, if you think your grocery bill in the West is high at the moment, it's going to be about 50% higher by the end of the year. And this is how you get instability in Eastern countries, because when the price of onions, as in the case of India, goes up, or the price of soya in China, governments get serious difficulties, because if people aren't getting fed properly, then they're getting out there and protesting.
What's interesting about this, about the story we've got here in the Financial Times, and indeed the one about oil prices closing on $100 a barrel, it's almost as though it's a debate postponed, isn't it? Because we were having this exact discussion before the 2008 crash.
The trend is going to be in one direction, because there's about a couple of billion people who every day are getting more money to spend, and the first thing they're going to spend it on is not refrigerators, because they can't leapfrog ahead that far. It's going to be on more and more food, and unfortunately, because of the state of as I say, natural constraints, fungal infections, would you believe, in Latin America, which restrain the supply of things like soya, you're going to get prices going through the roof. Let alone, we haven't even mentioned Africa, which is also growing. Thankfully, their population size is not as large as...
And of course, a big player, of course, in the discussion which is now going on about when to raise interest rates, which a lot of developed countries...
well, at this rate, you won't need to, because prices are going up so much. We're not going to be able to spend that much. If your idea about raising interest rates is to restrain spending, I can't afford to spend. I can't afford onions. Like anything else.
And oil, of course. You know, petrol's difficult. But there's South Korea just today raising interest rates. So they're trying to do something.
And of course, the Australians have, which is why that...
Well, in Southeast Asia, they need to, because they've had quite a bit of Goldilocks economy type state. I got back from Malaysia a couple of months ago, and they do need to raise interest rates before it gets too much of a bubble for that area, because they're benefiting from both the India side and the China side, and they're getting too much of a good thing. But for the rest of us, as I say, you're not going to need to raise interest rates to curtail people's spending, because the high street's going to do it for you because of the price of goods going up in any event.
All right, briefly, let's go to the Moscow Times. Bureaucrats to attend English lessons, Russian bureaucrats. Let me speak from my heart in English, Sports Minister Vitaly Mutko begged with an astonishingly thick accent, apparently, according to their story.
Yes, this was to do with the World Cup, wasn't it? Where it took him 2 weeks. I'm assuming he didn't know 2 weeks ahead of time that they were going to win it.
No, right.
Let's presume not. For all our sakes. The interesting thing about this is there's a heck of a lot of bureaucrats, aka civil servants, in England who are about to lose their jobs, so perhaps they should go to Moscow and start training people, you know, and teach Russian. Sorry, teach English.
Or maybe learn Russian. Alpesh, thank you very much indeed, Alpesh Patel. That's it from the two of us. Stay with us on the BBC.